On behalf of Pune chapter, I CMA Rahul Chincholkar welcome all the participant for the today's CEP. We all are aware that during this pandemic situation, we all are organizing all these lectures through video conferencing. So this is our uh, again we are meeting every Saturday we have different topics. So considering the current situations and the way this pandemic is making life miserable of all the professionals as well as the businesses, so Pune chapter is organizing one knowledge sharing session on advantage India on business, climate and economic policies. So this is a very dynamic topic, and for such topic we must have a personality who can deliver and give the lecture considering the overall business which is currently going through and the way currently businesses are performing. So for the session we have today CMA Amit Apte sir. He is a past president of our institute and who actually required no introduction, but as a formal practice I will quickly introduce Amit Apte sir. Amit Apte sir is having 24 years of post qualification experience, and he is giving services in various fields, including costing, MIS, and finance. And a variety of places he has contributed to institute level, and he is continuing doing so. So without wasting much of time, I will quickly request Amit Apte sir to continue for the session. So please start with the session. I hope you will enjoy the session for next 2 hours. Thank you, sir.
Thank you, Rahul and Shrikant. So when Pune chapter requested me that they wanted to have a session on a different topic, I took some time because last 8 years as a council member, I have been on various platforms, majorly talking only about the institute, the various activities of the institute, trying to promote the institute, and to a certain extent also talking about matters on cost audit, which is close to all our hearts. So this time I thought of doing something different. So over the next few minutes, I will be presenting my thoughts on a very different topic, that is the business climate and the economic policies that we are adopting in India, and whether the current pandemic situation is in fact a blessing in disguise uh, for our economy and whether it is an advantage India. So what I will be doing is I will be quickly taking you in the ancient history of India as well, and bring you slowly from the ancient history to the medieval history to the British rule, and then the independent India, and how our economic policies have shifted over the period, and the progress that we have done in the very recent past, maybe last 10 years. And as the pandemic is creating havoc across the globe, how do we propose to emerge out of this as a stronger country? So, friends, you are all aware that the Indian history goes back to the Indus Valley Civilization way back in 3300 BC, uh, wherein majority of the civilization was located around the Indus River, and the Indus Valley Civilization also is referred to as the Harappan civilization, and it is the home to four ancient urban civilizations, that is Egypt, India, China, and Mesopotamia. Now, what is Mesopotamia? We popularly call it as the Middle East today. So, all those countries, the Saudi, Sudan, Syria, UAE, Oman, all these are known as the Mesopotamia countries. Uh, this is not just a history, but the archaeologists have also unearthed the various household articles, weapons of war, gold, silver ornaments from that era. Mohenjo-daro and Harappa are the key townships, which are of archaeological importance as well. In those days, the entire economy was majorly dependent on trade and the overseas trade. Uh, After the Indus civilization comes the Vedic civilization, which is the earlier history of India. It is obviously named after the Vedas, and the Vedic civilization flourished around the river Saraswati, which is based in Rajasthan. And today's India, the states of Rajasthan, Haryana, and Punjab are where the Vedic civilization has blossomed. India is known for its yoga and Ayurveda, and the religious and the spiritual thought process that is embedded in all of us is primarily evolved in this Vedic civilization. After the Vedic civilization, the Buddhist era, that is of the Lord Gautam Buddha, then the Alexander's invasion, Gupta dynasty, Harshavardhan's era, all this is known to all of you. Uh, Historically, uh, the largest economy in the world used to be India. We have all heard about that. And basically, from the first millennia BC to up to the beginning of the British era, um, has been the golden period of the Indian civilization. After the British came in, however, they resorted to a lot of deindustrialization. Then they closed down the various craft industries that we used to boast of. The India's share in the world economy declined from about 24.4% to, that was in around 1700 AD, to about 4.2% in 1950. And the share of the global industrial output declined from 25% in 17th or 18th century to about 2% by the time we got our independence. Naturally, after independence, what happened was the government resorted to extensive public ownership, regulation, red tapeism, and various trade barriers because they were worried that once again some foreign country would come in and take away our freedom. So we resorted to the protectionist like environment. The industrialization was all along under the state monitoring. The state intervention used to happen at a micro level in all the businesses, especially in cases of labor and financial markets. Especially the labor was a very, very sensitive, of course, it still is, but in those period, it used to be very sensitive. Large public sector undertakings were formed by the government. Uh, the Central Planning Commission was constituted. Our currency during those days used to be inconvertible, and overall the tariffs and taxes were extremely high. I have seen articles wherein it is mentioned that the income tax, highest income tax, immediately after our independence used to be as high as 97.5%. And even when the country went into major overhaul in the 1991, after the 1991 economic crisis, even at that time, our income tax slabs used to be in excess of 50%, which was extremely high. Import licensing used to be there, so any industry could not import any raw material without those licenses. And overall, it was a license Raj, as we used to call it, that was prevalent right after independence all the way till the 1990s. You are aware that during 1991, there was a major economic crisis. And because of the economic crisis, India as a country went into a huge debt. Our, in fact, forex reserves were about 3 weeks of our imports sometime in 1991. And the government uh, came very close to actually defaulting on our own financial obligations. The low reserves of the forex also led to a sharp depreciation in the value of the rupee. And in fact, the World Bank and the IMF practically stopped their assistance to India at one point of time. We had to mortgage the country's gold to avoid the default on payment. And it was a very sorry state of affairs, which, because of the introduction of the LPG policy, thanks to the then Prime Minister Narasimha Rao and the Finance Minister Manmohan Singh, they came up with the LPG policy, that is the liberalization, privatization, and globalization, which opened the Indian economy to the outside world. And for the first time, many of those reserved sectors, the sectors which were typically reserved only for government, were opened out for the private players. The Indian currency was deliberately devalued so as to increase our exports. The market was open to private as well as foreign players. Foreign direct investments were allowed. Uh, Thrust was given towards creating a more competitive environment. And beyond 1991, India has definitely progressed a lot, from being a third world country to one of the most fastest developing country in the world. Uh, After 1991, major changes have happened in the last maybe 6 to 7 years, after 2014 elections. The first major change, I would say, was the Pradhan Mantri Janadana Yojana, wherein the financial inclusion of the masses and the deprived classes was the main objective of the government. Uh, the Janadana Yojana helped many who did not have any bank account to open their bank accounts and also have access to the social security schemes being announced by the government. In fact, more than 310 million Jandan accounts were opened within a span of a few months. That is more than 31 crores, uh, about one fourth of the population of India. And in those 31 crore accounts, more than 74,000 crore deposits were also made. So all these people came into the mainstream in the banking mainstream of India, and they naturally got the various benefits that the government has been announcing uh, after the Pradhan Mantri Jandan Yojana was made a big success. The government also introduced a few laws. One of the laws was the Arbitration and Conciliation Amendment Act. This was primarily to speed up the arbitration of commercial disputes. And all the arbitrations now must end within 12 months. In fact, in olden days, when this law was not there, court cases and disputes, industrial disputes used to go on for years. And this law has definitely sought to reduce the period of the arbitration proceedings. Aadhaar is one more major change in the way things are done in India these days. Of course, Aadhaar was launched in the year 2009, and it was only in 2016 when the Parliament enacted the Aadhaar Act. I believe it is called the Targeted Delivery of Financial and Other Subsidies, Benefits and Services Act 2016, uh, which has changed the entire finance and banking sector in India. The act not only strengthened Aadhaar itself, but it in fact made Aadhaar India's most creditable identity currency, if you call it. And it is today being used for filing taxes, buying of the financial products. Uh, it is also linked to direct benefits which are offered by the government, the public distribution system, employment guarantee schemes, cash transfers to the poor, various subsidies, and even for opening bank accounts, other is required these days. Um, all of us have also taken benefit once the subsidies started coming directly to our bank accounts, especially in case of the LPG gas, wherein we used to get a subsidized gas connection. But recently, last few years, we have to pay the full value, and the amount of subsidy is directly credited to our bank accounts. Of course, many of us have also foregone that subsidy based on the uh, request made by our Honorable Prime Minister, because that subsidy was supposed to be only for the needy. Then comes the Insolvency and Bankruptcy Code. This is one act which has made a sea change in the insolvency and bankruptcy proceedings in India. In fact, there is a study which was done before this act was introduced, and the findings of this study I have tried to present over here. Any insolvency proceeding, uh, Japan used to take, or rather still takes, about zero point 0.6 years to complete the entire process. Singapore, it takes about zero point 0.8 years. Same with Canada. Uh, China, of course, has 1.7 years for completing the process, as against 1.8 for USA. In fact, the world's average is just 2.5 years. Whereas if you look at India, this process used to take 4.3 years. So naturally, the introduction of the Insolvency and Bankruptcy Code has been very effective, especially in improving India's ranking in doing business, which I will be covering in the next part of this presentation. But the basic focus of this law was to
Well,
allow, yeah, I am audible, right?
yes, yes, sir, you are audible. Please
Okay,
continue, sir.
I thought that someone spoke something.
Oh, my mistake is he unmuted himself, sir. No problem, sir.
Okay, no issues. So, a time-bound resolution process and the formation of the Insolvency and Bankruptcy Board that acts as a regulator on all the insolvency professionals and the insolvency professional organizations are the key features of this code. One more major development was the demonetization. This is something which no one will ever forget in the near future. In fact, I would say that this was one of the most controversial enactment that was brought in by the government, and it was also a very disruptive kind of a change, and it was naturally criticized across India. Um the main focus of this demonetization was, of course, eradication of corruption and curbing the fake currency or terror financing. But then it did cause a lot of hardships to all the citizens. In fact, I remember my father was going on a trek to the Himalayas in Nepal. Nepal is one of the very few countries which allows Indian currency. So you don't need to carry Nepali currency. You can take Indian currency along with you, and it is widely accepted across Nepal. So the only challenge is Nepal does not accept 500 and 1000 rupee notes, which were prevalent at that time. Any note below 500 rupees, so primarily 100 rupees, 50 rupees, 20, 10 rupees notes are accepted in Nepal. So when he went out for the trek, he carried all the notes less than 500 rupees currency, which were available in our house with him. And within a couple of days, demonetization was announced. And what happened was, we were left with only 500 and 1000 rupees notes. And since the demonetization was announced, even in Nepal, notes having currency value less than 500, which were till that point of time accepted, all of a sudden people started refusing them also. So both us as well as my father faced some problems during that period. Of course, this is a very minor thing which we faced. I'm sure that a lot of Indian citizens faced a lot of hardships, but the intent of the provision was definitely praiseworthy. It did try to curb the fake currency and the terror financing, and benefits were visible for about a couple of years. Of course, if you look at today, I think we are back to square one, and many of the things which the demonetization tried to prevent are once again happening in quite a rampant manner. But then it did force the unaccounted money to flow into the banking sector. And I would call it a relatively failure, but of course with the right intent. Then comes the Real Estate Regulation and Development Act. So this was basically introduced to protect the interests of the consumers in the real estate sector. Uh, there were acute shortages deliberately created in the market for spiking the real estate prices. A lot of speculator-driven bubble-like asset prices were rampant at that time. There was no control on the various builders who used to take advances and then complete the projects at their own whims and fancies. So this act established a regulator to oversee the entire real estate sector, and in a time-bound execution of the projects was mandated. And also the act ensured that the various monies collected by the builders are used exactly for the purpose for which they have been collected. So it did curb the overriding ecosystem of corruption at various levels in the real estate world. The next act is the Goods and Services Act. This is something on which our institute and Pune chapter have organized several programs. This has been the biggest tax reform push so far by the government of India, and it has worked as a tool to evade the or rather curb the tax evasions. In fact, the GST law subsumed about 8 central taxes and 9 state taxes, and all these 17 taxes are now subsumed and only one single tax has come into place. And the indirect tax law is now in line with about 140 other countries which also has similar laws. The government also announced the Make in India campaign to boost the manufacturing industry. There are certain challenges in the way this Make in India initiative was undertaken, and it has not succeeded as it should have so far. But I believe that a booster dose is required for this initiative, especially in the current scenario of COVID. And I'm sure that Make in India can be a success, provided a few good steps are taken by the government to fast track the various investment proposals for manufacturing in India. Red tapeism was also curbed to a great extent, especially in the environmental laws. About 300 projects have been approved in the last few years, maybe 4 or 5 years. and the focus is now slowly shifting to red carpet in India rather than red tape. Uh, then the policy changes made in Indian market entry as far as the online applications, simplified rules for 100% FDIs have also helped to a certain extent. And there has been a thrust in developing infrastructure. Of course, it is not to our liking, definitely, but then government is making certain efforts to develop the overall infrastructure, especially the roads, rails, and also the water infrastructure. Uh, Over 100 smart cities have also been announced. Of course, the development is extremely slow so far. Um Majority of you all are from Pune, and you might have seen that since Pune has been announced as one of those 100 smart cities, even in Pune, no major headway has been made since the announcement till date. But then there are certain projects which have been successful, like the Delhi Mumbai Industrial Corridor or the Ahmedabad Dholera Special Investment Region or the Chennai Bangalore Industrial Corridor. Especially in the electronic and electrical components, Chennai and Bangalore have made a very good headway. As also the Vizag Chennai Industrial Corridors have shown a lot of progress. Because of all these developments in the last few years, the India's ranking as far as the ease of doing business has also improved substantially. Um, Especially reforms such as starting a business, the simplification of the processes, uh, dealing with the various permits, uh, trading across borders, and resolving of the insolvency have helped India improve its ranking. And in fact, based on the statistics that has been published in the year 2000, or rather for the year 2018-19, India has implemented a total of as many as 59 regulatory reforms, uh, which account for as much as one-fifth of all the reforms recorded worldwide, which is definitely praiseworthy. And after all these, the India used to be ranked 142 in the world as far as ease of doing business is concerned. This is a World Bank's study, and they publish the ease of doing business rankings every year based on the study. And our rankings have progressed from 142 in 2014 to 131 to 130 in the year 2016. And then over the next 3 years, we have progressed to 177, and our rank was 63 in 2019. Um, yes, the government does have the target of making India in the top 50 over the next couple of years. And only time will tell whether we succeed as far as that is concerned. So, with all these improvements over the years, India has matured into a developing country, and in fact has grown into the as the fifth largest economy in the world. We had ambitious plans of making India uh, a $5 trillion economy by the year 2025. There has been a coexistence of both the public and private sector lately. Majority of the sectors which were available only for the government companies are now also opened out for the private sector. Especially the privatization of coal industry or the airline industry, oil companies are also now private. India's economy was recrowned as the world's fastest growing economy, with the growth of 7 to 7.5% in the year 2018-19. Our exports have increased by 2.13% year on year to US dollars 491.64 billion during the period April 19 to February 20. Um, The Nikkei Indian Manufacturing Purchasing Managers Index has stood about 54.5 in February 2020, showing an expansion in the manufacturing sector as well. The index for the industrial production for the month of January was 137. The mergers and acquisitions activity in the country reached about 48 billion during the period January to September 2019. There have been a lot of successful IPOs as well. As many as 768 IPOs were registered, or new investments in the unicorn companies were listed. The total inflow of FDI has been about 456 billion during the year April to December 2019. In fact, India is the third largest startup base in the world, with over 8,900 to about 9,300 startups in the last decade. About 1,300 of these startups were founded in a single year, 2019. There has been an addition of about 7 unicorns in the year 2019, and to date the total number of unicorns have been 24. India is the world's leading recipient of remittances from our NRIs who are settled abroad, and as much as $80 billion are remitted to India every year. And our foreign exchange reserves were about 476 billion in the week of February 14, 2020, according to the data published by RBI. Of course, this figure as on date is in excess of $500 billion, which is equivalent to about 11 months of imports of the country. So we were definitely going strong. Of course, the first 3 months of the year 2020, there has been a bit of slowdown. Our economy has grown by about 3.6% only. But then year 2020 has brought a lot of surprises. No one expected this kind of a virus to hit all of us. And unfortunately, the entire year, I presume, has to be struck off from our minds, as well as let us forget this year and start looking at 2021 to be a year that has been giving some green shoots, which are already visible in the industry. And let us all hope that 2021 brings us a lot of better things than what has happened over the period of last 8-9 months. Of course, when the pandemic struck, the entire world went into a lockdown. India had a major lockdown for about 6 weeks. Slowly, we have started building the industries now, slowly started. Government has taken a lot of initiatives to reboot the economy. India implemented the lockdown very timely, and perhaps that is the reason why, despite being a 1.3 billion population country, our numbers in terms of percentage, as far as the total number of cases, though we are now number 2 in the world as far as the number of cases is concerned, if you look at the percentage in terms of the total population, we are quite okay. And the number of deaths have also been quite okay if you compare it with the rest of the world. And then finally, we seem to have some control over the pandemic. The numbers have slowly started subsiding. In fact, they have touched almost 1 lakh cases per day, which is now down to about 60,000 cases per day. Of course, there is still a long way to go. Um, Still, no one is in a position to tell when the vaccine will come, whether it will come at all, how effective that vaccine is going to be. But then it is a part of life, and we have to take charge of our lives and go on. We have learned to live with the virus, as they say. From the government side, the government introduced the cash and food subsidy, a package of 1.7 lakh crores, which was further extended to November 20. They concentrated on encouraging capital inflow into India. Focus is back to Make in India and making India as the contract manufacturer of the world. The government has also given a big booster dose to the MSME sector. And as I said already, a lot of activities have already started. The schools and colleges are likely to start after Diwali vacations. And government has prioritized the payments of the government dues to the industry as well as to individuals. And there has been a mixed monetary stimulus from the RBI as well as from the government. Uh, the total incentives are estimated to be about 20 lakh crores, which is about 10% the GDP of India. So I will take you through the various incentives that have been announced by the government as well as the RBI over the period. So one of the first incentives was the reduction in the repo and the reverse repo rates. You have all seen that the repo rate, that is the lending rate, as you say, that is the rate at which RBI lends to the various banks, has been cut by 75 basis points, and it stands at 4% as on today. The effective deposit rate, that is the reverse repo, so it is exactly the opposite of the repo rate. It is the rate at which RBI borrows funds from the banks. So it has been slashed by 1.15% or 115 basis points. This is primarily to discourage the lenders from playing safe and parking cash with the RBI. So that rate today is 3.35%. Then the cash reserve rate has been reduced from 4% to 3%. The liquidity coverage ratio has been lowered to 80% from 100%. And the this slew of initiatives from RBI has definitely increased the overall liquidity in the market, in the hands of the banks as well as the industry. Um, Unfortunately, it seems that some of this liquidity that has been pumped in by RBI has flown into the stock markets. So you might have noticed that the Bombay Stock Exchange Sensex is back above 40,000, which is phenomenal for the kind of economy we are having as on date. But then they say that market always is a futuristic, and it always reflects what market expects, say 1 year down the line. So obviously, let us discount that apart from the liquidity that has been pumped into the market also expects that Indian economy is likely to go back on track maybe 1 year down the line. RBI also announced the loan freeze, that is the moratorium on the loan repayments. Initially, it was announced for 3 months. It was further extended by 3 more months. Um, then the lenders now can freeze the payments which were outstanding as on March 1. And also on the working capital facilities, interest need not be paid for up to 6 months. There is also a case going on in the Supreme Court. The decision is expected very soon, wherein the government has already given an affidavit that they will not let the banks charge interest on interest. Uh, of course, we will have to wait for the decision to come. And also the accumulated interest can be paid later, and the banks won't default as per the earlier NPA norms. Of course, that has now this scheme is over at the end of August, and let us hope that the third quarter results of the bank will give a much better clarity as to how many of those loans have actually turned bad and how many have started repaying their loans. RBI also opened special windows for the long-term repo operations. In fact, the first tranche of 1 lakh crores of that is called the TLRO, targeted long-term repo operations, for investing in the corporate bonds. Um, it was also backed up by another tranche of 50,000 crores, that is TLRO 2, and special refinance scheme of 50,000 crores for umbrella financiers like CDB, NABARD, and the rural sector and agriculture were also announced. For the first time, India also opened up its sovereign bond market, with the government bonds to the overseas investors. This is definitely a very big step to secure the access to global indexes as the government now embarks on the large-scale borrowing plan. And then a special liquidity scheme for NBFCs and mutual funds. You have seen what happened to the Franklin Mutual Fund when all of a sudden people started withdrawing even from the debt funds. So they had to freeze 6 of their funds, and they are now releasing the payments as and when money is being received by them. So a special liquidity scheme of 30,000 crores was announced by the government, also targeting the mutual fund industry and the NBFCs. This 30,000 crore liquidity scheme is fully guaranteed by the government of India. And then there is a partial credit guarantee scheme extended to cover the borrowings such as the primary issuance of the bonds or the AA minus bonds. And there has been a lot of incentives given to the MSME sector also. Emergency credit line to businesses which fall under the MSME from banks and NBFCs up to 20% of the entire outstanding credit as on 29th of February was announced. So if a company is having outstanding of say 10 crores, then they can borrow extra 2 crores, that is 20% of the outstanding as on 29th of February. Maximum borrowing, of course, was restricted to 25 crores. And the limit of turnover for these MSMEs was 100 crores. And this 20% extra borrowings, whichever are taken by the MSME sector, they will have a tenure of 4 years with a moratorium of 12 months on the principal repayment. So for 12 months after taking this additional credit, the MSME industry is expected to pay only the interest, and only after 1 year's term is over, then the basic principal amount is required to be paid over the next 3 years. The government has also given a 100% credit guarantee cover to banks and NBFCs on the principal and interest for loans disbursed under this scheme. It is expected that about 45 lakh units can resume their businesses taking benefit of this scheme. And about 50,000 crore equity infusion into MSMEs is also proposed. Of course, the MSMEs will be encouraged to get themselves listed on the main board of the stock exchanges, where the fund of fund will contribute to the equity. So those MSMEs which are not listed on the MSME stock exchange will not get benefit of this fund of fund scheme. Lastly, what government also did was they increased the limit of the definition of MSME. You are all aware that the definition of MSME was only on the basis of investments. So now the revised definition is on the basis of investment as well as the turnover of the MSME. So earlier the various industries were categorized into micro, small, and medium-size enterprises based on the investments. So in case of a manufacturing enterprise, investment less than 25 lakh was a micro, less than 5 crore was small, and less than 10 crore was a medium scale industry. And if it was a service enterprise, then these limits were 10 lakh, 2 crore, and 5 crore respectively. So these are now revised to, instead of 25 lakhs, it is now 1 crore of investment and a turnover of less than 5 crore for micro. Then in case of small, it is investment less than 10 crores and turnover of 50 crores. And for medium scale, there was an earlier announcement of 20 crores of investment and turnover less than 100 crores. In fact, if you look at the earlier slide, the 20% additional credit facility was announced, keeping in view that they had increased the limit for the medium scale enterprises to 100 crores of turnover. But later, with effect from 1st of June, this slab was further improved, and now any investment up to 50 crores and turnover up to 250 crores is eligible for that industry to be recognized as medium scale industry, and all the benefits of the MSME sector will be available to these companies under the MSME classification. Beyond pandemic, I see certain green shoots or certain major advantages that India as a country has, which will help India in coming out of this problem quite quickly. One of the first advantages is that our rural economy is not affected by the pandemic. Not affected in the sense, not to that extent which we as citizens of towns and cities are facing. That kind of a situation is not there in the rural part of India. Agriculture as a sector is also relatively unaffected. In fact, those of you who are following the statistics that is published every month, if you look at it, the motorcycle sales over the last couple of months have been in excess of last year's motorcycle sales, primarily because of high demands from the small towns and villages. Same is the case with small cars. Cars having value less than 3 to 4 lakhs, they are also in large demand. In fact, Maruti has reported about 30% increase over August 2019 figures. September 2019 figures in the figures for September 2020 that they announced. And there is also a massive increase in the tractor sale year on year and of course month on month. Of course, the tractor sale increase, according to me, is not only because of very good monsoon. India has already seen the excess of 100% monsoon. But the tractor sale is a different story. I have been talking to a few of my friends who are from villages, and what they tell me is that even for small farms, maybe 2 acre or 3 acre size of land, they are not getting laborers to toil on the land, and that is why they are forced to going for tractors. So this is primarily because of the COVID, where people are still scared of going to the work. And the side effect of this, which is likely going to be, is that once that farmer has purchased the tractor, he has replaced that labor, and next year when the labor is available once again to the farmer, perhaps he may not use him because he would have seen the benefits of the tractor. So that is a fallout of the pandemic. But then you really don't have any choice. You have to live with that. Our demographically young population will also help generate strong domestic consumption. Luckily, the crude oil is still subdued. It was in fact the lowest ever 3-4 months back, but now it is $40 plus mark. Our forex reserves stand at about, as I said, this is an old slide. We have now crossed $500 billion, and in fact, India's trade surplus in June 2020, for the first time in 18 years, we had a surplus. So our exports were more than our imports, primarily because of subdued oil prices and robust IT industry. Having seen all this, our GDP for quarter 1 has been minus 23.4%. Various estimates have come in for the next 3 quarters, right from the World Bank to IMF to RBI have estimated Indian economy to once again degrow about 12 to 15% in quarter 2 also, and about 5 to 8% in quarter 3. So January to March 2021 is expected to be positive, and overall for the complete year 2021, RBI has projected minus 9.5% GDP degrowth, and IMF has projected 9.6% degrowth for the complete year. Of course, everyone is unanimous as far as the numbers for 21-22 are concerned. They are expecting a growth of 9 to 10%. But please remember, 9 to 10% on the reduced GDP for the year 2021. So if you look at the normal growth, that is not there. This 9 to 10% is on the toned down GDP numbers for 2021. There are certain actions taken by our government during the pandemic period, which have been praised across the world, and naturally India's credibility as a nation, I presume, has improved in the minds of the Western world. The first one was India pledged about $10 million towards COVID emergency fund for SAARC countries. This was a move that was appreciated by all the SAARC countries except, of course, Pakistan, which will not be able to praise it because of political reasons. We put up a rapid response team of doctors and specialists specifically for the SAARC countries. In the initial phase of the pandemic, when the world thought that HCQ tablets are giving good results in case of COVID patients, we were able to export HCQ tablets to about 55 COVID hit countries, including the United States, which got praise from President Trump as well. And in fact, he said that India's help during this crisis will not be forgotten. Of course, whether he gets re-elected in the November elections is a question mark. But at least in the minds of majority of the even opposition in the US, India's efforts have definitely been considered. And overall, India's swiftness in dealing with the COVID-19 will decide the world's future. That was a statement done by the WHO, which later also praised India for its fight against the coronavirus. Another development which has happened because of the COVID, that the entire globe is unhappy about China. In fact, Japan has already announced that it will spend about 2.2 billion US dollars to help Japanese countries move their production facilities to other countries. Apple, Microsoft, Google, which are the giants of USA, are also looking to move production away from China. In fact, Foxconn, which manufactures Apple mobile phones, has already announced a major investment in India. Korean companies are keen to move out of China to India. In fact, there was a news article in the Business Today that as many as 1,000 foreign companies are considering production in India, and in fact, 300 of them are pursuing plans to exit China. So basically, as a government, the government has also started taking certain steps. Just a couple of days back, there was a major statement from our Honorable Railway Minister and the Commerce Minister, Piyush Goyal, that wherein he wooed the US companies to look at India as their next investment destination. Um, the bilateral trade between India and US currently, for the year 2019 was about 145 billion, and government has set an ambitious target of reaching up to 500 billion over the next 5 years. Of course, they have also acknowledged that there are certain issues that need to be resolved, especially as far as the preferential schemes or the medical devices, agriculture, dairy, ICT products. There has been some issue with Harley Davidson motorbikes as well. Some issues as far as the e-commerce and visa issues are being thrashed out. So if all goes well, we may hit a $500 billion mark as far as trade with the US is concerned. And the government is definitely wooing the US business, and India is looking to reduce the cost of logistics and also trying to bring in several tax reforms. Like the single window clearances to make it very easy for foreign companies which are looking to set their operations in India. Uday Kotak of Kotak Bank has also made a very strong statement that digital and e-commerce technology, pharmaceutical, and consumer industry are the five industries that we should be looking at, and this is the best time to invest in India. Um, of course, there are going to be a lot of challenges in grabbing this opportunity, I would say. Moving the manufacturing out of China is not going to be easy. It's going to be quite a difficult for various complexities. Building capacities in other countries are not so very easy. Also, India ranks after Indonesia, Malaysia, Vietnam, and Thailand as far as priority of the foreign companies in shifting their setup out of China are concerned. So we need to do more to bring these companies which are willing to move out of China to India. And one of the key elements has to be easy and quick land allotments to the prospective companies. This has been a pain area for India for long. But then recently I saw a news article which has said that India is developing a land pool nearly double the size of Luxembourg to lure the businesses moving out of China. For the benefit of the audience, Luxembourg is about 243,000 hectare area, according to the World Bank. And India has identified about 461,000 hectares across the country for this purpose. And it includes more than 1 lakh hectares of existing industrial land in states like Gujarat, Maharashtra, Tamil Nadu, and Andhra Pradesh. And there is no doubt that land acquisition has been one of the main pain areas. We have a recent history of POSCO or Saudi's Aramco getting frustrated because of the hassles. And at present, the delays as it involves, I mean, basically negotiating with the small plot owners. Many of the companies have to directly negotiate with the small plot owners to acquire the land. So if government intervenes and they makes available large land pockets, it will be much better for the industries to come down to India. Of course, the from the government side also there has to be a speedy disposal of various matters. For that, government has identified about 10 sectors. The first one is the electrical, pharmaceutical, medical devices, electronics, so on and so forth as the focus areas for promoting the manufacturing. And for these areas, they will be coming up with special schemes and fast track facilities. In fact, government has already asked the embassies which are situated in various countries abroad to identify companies who are scouting for options of moving out of China. And the government's investment agency has received inquiries from Japan, US, South Korea, and China expressing interest in allocating to the India's third largest economy. Individual states in India have also been urged by the government of India to evolve their own programs for bringing in the foreign investments. In fact, Andhra Pradesh has already taken a lead in this, and they have already approached several companies in Japan, US, and South Korea. Uttar Pradesh, for that matter, is developing an online system for land allotment for all the industrial and commercial purposes, and it is also in talks with many global companies for investing in Uttar Pradesh, especially in the defense and aerospace sectors. Government, in order to develop the infrastructure, must promote the PPP partnerships. We have to recognize that it takes years to create good infrastructure. In fact, we in Pune have seen the first flyover which came up in Pune took as much as 7 years to complete. We have been talking about the metro project for the last about 15 years, and it has taken off only in the last couple of years. Pune airport, since it is a military base, we have been trying to locate land to shift the airport for last more than 10 years. And only announcements are being made. So far, no major headway has been done in land acquisition, even though the government has already announced that their intent is to have a new airport in the Purandar area. But no major headway has been done in the last 3-4 years. The infrastructure development, no doubt, has to be focused rather than a random development. In fact, I will give you an example. I was in Dubai for an assignment way back in 2000. That was 20 years ago. So there is a big road, Sheikh Zayed Road, that is what they call, which connects Dubai to Abu Dhabi. It's a 10-lane road, so 5 lanes on each side of the road, and plus the service lane. So practically it's a 12-lane road. And mind you, the lanes of roads in Dubai are much bigger than the lanes that we have seen on the express Mumbai-Pune expressway. So you can imagine the size of the road. So one day there was an advertisement in the newspaper that for the next 24 hours, Sheikh Zayed Road will be closed from this intersection to this intersection. And the purpose that they had written was they are installing a bridge that will cross the entire road. Now, after seeing that advertisement, a thought struck my mind that for closing a road for 24 hours, they are thinking about building the entire bridge. How is that possible? But in fact, very next day after the road was opened, when we traveled on that, we the complete infrastructure in place. In fact, we should have noticed it earlier also. The construction activity was going on for about 6 months on both the sides of the road without affecting the traffic. And in that 24 hours, when they closed down the road, they had already built ready-made concrete premix bridges, which they just brought there and installed on the pillars which were already in place. So that is the level of infrastructure, and that is the pace at which infrastructure development I have seen 20 years ago, which is still not there in India. In fact, I personally feel, without politicizing anything, that the biggest asset of India is its democracy. We boast that ours is a democratic country. There is freedom of speech. Unfortunately, this very democracy and this very freedom of speech are our biggest constraints, and we must find out ways to work around that if we have to progress anywhere to the scale of what we are planning. There has to be simplicity in the overall compliances. We take a lot of time in getting the compliances done. The various tax laws have to be much more simplified and have to be consistent. With the kind of amendments being brought into the GST law practically every day, it's not a very healthy sign if we have to ensure that many industries do come to India. We have to accelerate the labor laws as well. Of course, just in the last concluded parliament session, 3 labor codes have been cleared by the government. One was the Occupational Safety, Health and Working Conditions Code. Then I think the Industrial Relations Code and the Social Security Code. And these 3 codes are going to replace as many as 24 central labor laws, which is a very, very positive move as far as the labor law reforms are concerned. Ensuring the availability of electricity and water are also going to be of paramount importance. Yes, India is now a power surplus nation, but still, if you want to have a new connection, it does take a lot of time to bang your head with the local authorities. It takes up to 2 months as well to get a power meter installed at your premises, which is also needs to be improved upon. Then the telecom licensing has to be much faster. 5G infrastructure has to be created in a much faster. Yes, on its own, a lot of investments have flown into Reliance Jio, and I'm sure that that company is going to make a major headway as far as infrastructure of telecom is concerned. But the rest of the companies need to follow and catch up with them very fast, because unless there is good, healthy competition, we will end up in a monopolistic kind of a situation, and it's going to be very difficult if only one company has a major say in the telecom industry. In fact, a couple of days back, there was a major rainfall in Pune, and the entire network of Vodafone Idea has collapsed. We have all witnessed that. That is not something that would be appreciated by any of these foreign companies that are likely to come to India. Finally, I would also like to press upon. In fact, there is a joke moving around. Just because I mentioned Vodafone Idea, I would like to share that joke with you. Passengers have embarked the flight, and there is an announcement by the flight attendant to kindly switch off their mobiles or keep them on aeroplane mode. Now, one of the passengers just highlights to the air hostess that he is using an Idea mobile, so maybe he doesn't need to switch it off. There is no range on it anyway. So that is the kind of things that are going on with idea, I hope that they come out of this very soon. As far as India as a manufacturing hub is concerned, I would say that we essentially have to focus on an area where India has a natural advantage. We should not be competing with the world, or rather copying something which is already established in the world. We have to find out. I do not have the answer as to what it is. For example, if you look at China, economy of scale is something that China over the last few years has developed, which is unthought of. No country in the world is able to match China as far as economy of scale is concerned. In fact, I was talking to a friend in the UK when they were under the lockdown, and I was checking with him whether there is what is the sense of the industry in the UK, whether they will be interested in coming to India. And what he mentioned is that to a great extent there is unhappiness, naraji आपण जे म्हणतो. So the world may be unhappy with China because of the virus that it has given to them. But today, he was mentioning about the UK companies. Practically overnight, China was able to create factories and transfer the manufacturing facilities of UK overnight to China when UK was in lockdown. So that is something which we must definitely appreciate that China can do, which definitely we cannot do at least for the next few years. So economic scale is the USP as far as China is concerned. Then if you look at Japan, definitely it is the quality that they boast of. In fact, there is a story, I do not know whether it is true or otherwise. IBM, which is a computer giant based out of the US, gave an order of an integrated circuit to a company in China. The order was for about 1 lakh pieces of that IC. And in the purchase order, they made a very nasty statement. They said that not more than 3 substandard ICs in a lot of 1 lakh will be acceptable. Well within the time period which was agreed to, the Japanese company supplied the entire consignment to IBM, and there was a covering letter that as per your purchase order, which we are supplying 1 lakh ICs which are of the best quality, and we are also supplying 3 substandard ICs as per your purchase order. So that is the confidence that the Japanese people have on their products. When it comes to Germany, no one can beat engineering as far as Germany is concerned. Their products are engineering par excellence, no doubt. In fact, even Japan, majority of their products, even though they are very good in quality, they are basically copied from the original German engineering designs. But they make a very good copy with the highest quality. So as far as India is concerned, what is our DNA? We need to find areas where India has a natural advantage, which I said already. Yes, IT has been our success story. We are the leaders globally as far as the IT industry is concerned. So maybe one thought which comes to my mind is maybe we can leverage on the Industrial Revolution 4, that is Internet of Things, which is fast catching up. And we can bring the Internet of Things revolution, which is basically IT based, to the manufacturing setup, and maybe marry the two and make Indian manufacturing a different kind of experience to the global companies. Or maybe another area which we can focus on is the Ayurveda and yoga, wherein we are undisputed leaders. But then the volumes that perhaps we can generate in that is limited. So I leave this thought to all of you as to what is it that we should focus on, which are the areas where we have that kind of a natural advantage. Maybe we can come up with a white paper and give it to the government. I conclude my presentation with a few slides, which are also thought-provoking slides, without hurting the sentiments of anybody. Uh, I consider India as a nation where there are many who are masters of jugaad. So we are the masters of jugaad. So whether we can convert this jugaad to innovative ideas which we can give to the world, um, that is a thought that I am leaving in front of all of you. Um, these are very makeshift ideas which absolute common man would have thought of. Converting a hath gadi into a jeep, or a bicycle into a armchair, uh, or a bucket into a shower, a shoe into a mobile charger. So these are the jugaad ideas which, if we can take it one level up and convert that into innovative ideas, maybe we can give the world some better innovations. And this is a slide which I had presented in my earlier presentation also. So let us hope that we are all locked down into a cocoon, and as and when we move out of this cocoon, we will be a beautiful butterfly, which will be the apple of the eye of the entire world. So thank you all, and thank you Pune chapter for giving me this opportunity for making my presentation. And if at all there are any questions, I would be happy to take.
Thank you, sir. Request to all participants, if you have any question, please unmute yourself and ask question. You can see there is no question in chat box. If anyone having questions, please unmute yourself.
Amit sir, good evening.
Good evening, Santosh.
अविनाश बोलतोय. So I want you.
Oh, sorry.
Avinash Thakur, sir.
I want
हाँ,
your
बोला
view
बोला.
on the agriculture sector. As far as India's point of view, how agriculture can become a sector which can take us to global level.
See, one of the biggest challenge as far as agriculture sector is the size of our lands. So there has to be something like joining hands. The cooperative sector to a certain extent did try that, but still the majority of our agriculturists operate on very small kind of lands. So maybe some kind of an incentive if government can give them in joining hands and farming on large hectares of land rather than small pieces of land. We can definitely bring in much more productivity, and we can be suppliers to the world. Also, my personal observation, nothing political about this, the recent farm changes or the farm amendments that have been brought in, wherein the farmer can now sell his produce across the country, are in fact good for the farmers. I strongly believe that whatever halla gulla is going on as far as those amendments are concerned, are primarily being raised by the middlemen whose business is going to be taken over. Lastly, I also feel that we should be introducing much more technology as far as the farm sector is concerned, rather than traditional ways of farming. Uh, the Indian farmer, thanks to COVID, has naturally progressed from farm labor to tractors. But there are many more innovations which are deployed across the globe, which our agriculture sector should also think of. Yeah.
So the COVID has brought in that particular fact that agriculture is one of the industry which is strong in India, and it can take definitely advantage of the emerging situations. And as you said, the jugards can be implemented in that sector also.
Yes, absolutely. In fact, many of our farmers are already adopting the Jugaad technology. Only that they do not have the assistance of high-tech machinery, uh, which if offered to them, I'm sure that our farmers can do wonders.
Certainly. Thank you.
Amit sir, this is Vaman Parkhi. I just wanted to add a point to the earlier question that because of this new farm bills, one thing which is going to happen is contract farming, where somebody who wants to buy produce can assure the farmer that okay, you produce vegetables and I will buy after 3 months, and that will give that kind of an assurance or certainty, which is going to be a big step. And I would see this as a major help to the agriculture sector. And see, India has done fantastically well, because when we got independence, and many of us who are in their 50s, we remember that we used to get red colored wheat, which used to be PL 480, which was received from US. From there, we have now self-sufficient in agriculture. We are world's biggest producer of milk. I think it's with all this, as you rightly said, with these three farm bills, agriculture may turn around completely, and that will also impact the total economy, because the demand in the rural economy, which still has about 40% of the people dependent on that, will increase, which will give boost to industrial production.
Yes, that's a very good point. In fact, companies like ITC or Reliance Smart would I'm sure be benefited because of this move, and it's a win-win situation for these companies as well as the farmers.
Yes. Is there any questions? It seems there will be no questions. On behalf of Pune chapter, I really thanks to our today's speaker, CMA Amit Apte sir. He has given lot of knowledge shares during the entire session. He has covered all the new laws and what are the benefits and what are drawbacks he already covered. And best parts he covered the globally statistics and globally industry sector wise what are the impacts he already covered. This is the important and this is required for all the practicing also employed cost accountants. I heartily sincerely thanks to Amit Apte sir, and I declare that today's session is completed here. Thank you all for being continued your patience hearing. Thank you. Thank you, sir.
Thank you.